What if I told you that the money sitting in your bank account right now is actually losing value every single day? That's not a scare tactic. That's inflation. And while your savings account pays you 0.5%, inflation is eating away 3, 4, sometimes 6% of your purchasing power every year. So the real question isn't, should I grow my money? The question is, can I afford not to? Today, I'm going to show you exactly how to grow your money quickly and safely, even if you're starting with just $100. No get-rich-quick schemes. No risky gambits. Just proven, time-tested strategies that actually work. Stay with me until the end, because strategy number 5 is the one most people completely overlook, and it could be the most powerful move you make this year. Welcome back to the channel. If you're new here, we break down money, investing, and financial freedom in simple, no-nonsense terms. Now, before we dive in, I want to be clear about something. Quickly and safely doesn't mean overnight millionaire. What it does mean is smart, accelerated growth with managed risk. These are strategies that give you the best return for the least amount of danger to your hard-earned money. Strategy 1. High-yield savings accounts. All right, strategy number 1. And yes, I know what you're thinking. A savings account? Really? Hear me out. A regular savings account at a big bank pays you almost nothing. We're talking 0.01% to 0.5% interest. That is basically zero. But a high-yield savings account, offered by online banks, can pay you anywhere from 4% to 5.5% annually right now. That's 10 to 50 times more than a traditional bank. If you have $10,000 sitting in a regular savings account, you'd earn maybe $50 in a year. In a high-yield account, that same $10,000 earns you $500 or more with zero risk, because these accounts are government insured up to $250,000. This is your emergency fund home. This is your short-term savings vehicle. It's not going to make you rich, but it's the safest, fastest way to make your idle cash actually work for you. Action step. Open a high-yield savings account this week. Look for options with no monthly fees and no minimum balance. Strategy 2. Index funds and ETF strategy number 2. And this is where real wealth building begins. Index funds and ETFs, exchange-traded funds, are collections of stocks that track an entire market. So instead of betting on one company, you're investing in hundreds or thousands of companies at once. Here's what makes this powerful. The S&P 500, which tracks the 500 biggest companies in America, has returned an average of about 10% per year over the last 100 years. Even through crashes, even through recessions, even through wars and pandemics. Long term, it always goes up. And the best part? You don't need to be an expert. You don't need to pick stocks. You just invest regularly and let compounding do the heavy lifting. Here's a simple example. If you invest just $300 a month into an index fund starting at age 25, by age 65, at a 10% average return, you'd have over $1.90 million from $300 a month. That is the power of time and compounding working together. The risk? Short-term, the market goes up and down. But historically, patience always wins. This is not a get-rich-quick strategy. It's a get-rich-for-sure strategy. Action step. Open a brokerage account and start with a low-cost S&P 500 index fund. Look for ones with an expense ratio under 0.1%. Strategy 3. Dividend stock strategy 3. Getting paid just for owning stocks. Dividend stocks are shares in companies that pay you a portion of their profits regularly, usually every quarter. Companies like Coca-Cola, Johnson & Johnson, and many others have been paying and increasing their dividends for decades. This creates two ways to make money. 1. The stock value goes up over time. 2. You get cash payments deposited directly into your account, whether the market is up or down. The average dividend yield on solid dividend stocks ranges from 2% to 6% annually. And when you reinvest those dividends, buying more shares, your growth accelerates dramatically. This is one of Warren Buffett's favorite strategies. He earns billions in dividends every year just from stocks he bought decades ago. Action step. Research dividend aristocrats. companies that have increased their dividends for 25 or more consecutive years. These are battle-tested, financially stable businesses. Strategy 4. Real estate investing without buying property. Strategy 4. Real estate. But not the way you think. Most people hear real estate investing and think, I need hundreds of thousands of dollars, a mortgage, tenants, repairs. It's overwhelming. But here's what most people don't know. You can invest in real estate starting with as little as $10 through something called REITs. Real estate investment trusts. REITs are companies that own income-producing real estate. Shopping malls, apartment buildings, hospitals, office towers, and they're required by law to pay out at least 90% of their taxable income as dividends to shareholders. You buy shares in a REIT just like you buy a stock. You get exposure to real estate. You earn dividends. You don't deal with a single tenant or broken pipe. REITs have historically returned 10 to 12% annually, sometimes even outperforming the stock market. There's also a newer option, real estate crowdfunding platforms, where you can pool money with other investors to fund actual property deals. Some platforms let you start with as little as $500. Action step. Look into publicly traded REITs on any major brokerage platform or research real estate crowdfunding platforms that are available in your country. Strategy 5. Invest in yourself first. Okay, Strategy 5. And I promised you this one would surprise you. The single highest returning investment you will ever make is in yourself. Think about it. A $200 online course that teaches you a high-income skill, copywriting, coding, digital marketing, data analysis, could increase your income by $10,000, $20,000, or $50,000 per year. That's a return of 5,000% or more. No stock market in the world can beat that. Your ability to earn is your greatest asset. The more skills you stack, the more value you bring, the more money you make, and then you have more money to invest using all the other strategies we've talked about. Read books, take courses, learn from mentors. Attend workshop. Sharpen your skills constantly. This is not optional. It's the foundation everything else is built on. The most financially successful people in the world are obsessive learners. That is not a coincidence. Action step. Identify one high-income skill you can start learning this month. Commit to 30 minutes a day. That's it. Bonus tip. Compound interest is the eighth wonder. Before we wrap up, I need to leave you with this. Albert Einstein reportedly called compound interest the eighth wonder of the world. He said, "He who understands it, earns it. He who doesn't, pays it." Compounding means your returns earn returns. Your growth grows, and the longer you let it run, the more explosive it becomes. The secret is this. Start now, today. Not when you have more money. Not when the market looks better. Not when you feel ready. Because every single day you wait, you lose compounding time you can never get back. $1,000 invested at 25 becomes $45,000 by 65 at 10% return. The same $1,000 invested at 45, just $6,700. Same money, same return rate, 20 years difference. That's the cost of waiting. OUTRO and call TO action. So let's recap the 5 strategies. 1. High-yield savings accounts for safe, liquid cash growth. 2. Index funds and ETFs for long-term market wealth. 3. Dividend stocks to get paid regularly. 4. REITs for real estate returns without the headaches. 5. Invest in yourself for the highest ROI of your life. You don't have to do all 5 at once. Pick one. Start today. Build from there. If this video helped you, hit that like button. It genuinely helps this channel grow and reach more people who need this information. Subscribe if you haven't already. We post new financial content every week. And drop a comment below. Tell me, which strategy are you starting with? I read every single comment. I'll see you in the next one. That's all. Thanks for watching.